Hello, friends. I'm CMAD Ponch. In today's explainer, we're going to dive into something really exciting, a powerful strategy to build a lifetime of income using just two simple tools, SIP and SWP. Let's break down exactly how you can create a system that literally pays you for life. Just let that sink in for a moment. Imagine investing a pretty manageable amount every month and watching it turn into a system that pays you over $1 lakh every single month for the rest of your life. I know, it sounds a little crazy, right? Maybe even too good to be true. But I'm here to show you that with the right strategy, using SIP and SWP, this is absolutely possible. So where do we even begin? How do we build this fortune? Well, the first part of our machine, the real engine of it all, is something called an SIP. Let's get into what that is and why it is so incredibly powerful. So, SIP stands for Systematic Investment Plan. The key words here are systematic and regularly. Instead of trying to guess the market, you just invest a fixed amount of money, say every single month, automatically. This consistency is what unleashes the true magic of wealth creation, compounding. It's kind of like your money starts having babies, and then those babies grow up and start having their own babies. It just snowballs. All right, let's put some actual numbers to this because that's where things get really interesting. Let's imagine you start investing just 10,000 rupees a month, and you do this consistently for 25 years. Let's see what happens to that money. Check this out. The annual return you get makes a huge difference. At a 10% return, you end up with about 1.3 crore. Pretty good, right? But look what happens at 12%. It jumps to almost 2 crore. And if you get a 15% return, a massive 3.3 crore. That is the power of compounding we're talking about. Okay, that was impressive, but what if you can stretch your budget just a little bit more? Let's see what happens if we double that monthly investment to 20,000 rupees. We'll keep the time frame the same, 25 years. As you can imagine, the results get even more wild. And this chart just makes it crystal clear. At a 12% return, your 20 grand a month grows to about 3.8 crore. But push that return up to 15%, and your final corpus explodes to 6.6 crore. So the lesson here is simple. A higher investment amount plus a good rate of return, well, that equals massive, massive wealth creation. All right, so you've done the hard work, you've been disciplined, and you've built this incredible nest egg with your SIP. What now? How do you actually turn that mountain of cash into a steady paycheck? Well, let's dive into the second part of our strategy, turning all that wealth into real income. This is where the SWP, or Systematic Withdrawal Plan, comes into play. You can think of it as the complete opposite of an SIP. Instead of putting money in every month, you start taking a fixed amount out. It's basically a way to create your own personal salary paid directly from the investments you've worked so hard to build. Let's look at a quick example. Let's say you've built a corpus of 2 crore. You then start an SWP with a 6% annual withdrawal rate. You know what that means? That's 12 lakh a year, which works out to over 1 lakh every single month. And here's the best part. The rest of your money, the huge chunk of it, stays invested and can actually keep on growing. Okay, now for the really exciting part. We've seen the wealth engine, the SIP. We've seen the income generator, the SWP. Now let's put these two puzzle pieces together and see the full, powerful lifetime income plan in action. The master plan is actually beautifully simple. It just boils down to these 3 steps. First, you build your wealth with a consistent SIP, and you start as early as you possibly can. Second, you just let it grow. You have to be patient and stay invested for a long time, like 20 or 30 years. And finally, you switch over to an SWP to start generating that income, making sure you only pull out a small portion. So let's run through a complete real-life scenario from start to finish. Imagine you decide to invest 15,000 rupees a month in an SIP and you stick with it for a full 30 years. After those 3 decades of discipline, just look at what you've built. At a 10% return, you're looking at about 3.4 crore. At 12%, that number becomes a staggering 5.3 crore. And what if you manage a 15% return? You've created a corpus of over 10 crore. Now, let's see what kind of income that can get you. Let's just focus on that middle number for a second. 5 crore rupees. That's what 30 years of discipline and the power of compounding can get you. So what does a 5 crore corpus get you? Well, if we use a safe 6% withdrawal rate, that translates to 30 lakh a year. That breaks down to a monthly income of about 3.3 lakh. And don't forget, if the market keeps giving you returns of around 10 to 12%, your main corpus can still keep growing, even while you're drawing this amazing income. Now, this strategy is incredibly powerful, but it's not magic. It works because of some very sound financial principles, and it definitely requires discipline. So let's go over some really important rules you have to follow to make this work. Think of these as the guardrails on your highway to financial freedom. But before we get to the rules, let's just quickly recap why this whole system works so well. The SIP builds your wealth using that compounding magic. The SWP then seamlessly turns that wealth into your personal salary. And the key to it all is that controlled withdrawal rate. That's what makes sure your money is going to last. Please remember these 3 crucial rules. First, you have to keep your annual withdrawal rate sustainable. Somewhere between 6 to 8% is ideal, so you don't burn through your capital too fast. Second, you have to choose good, well-researched mutual funds. Your returns depend on it. And third, and this might be the hardest one, you have to stay disciplined. Don't panic and sell when the market dips. That's how long-term investors win.
So there you have it. The formula, in principle, is actually that simple. You invest early and you invest consistently with an SIP. You let time and compounding build you a large corpus, and then use an SWP to turn that corpus into a lifetime stream of income. The best part is you can start today, even with 5,000 or 10,000 rupees.
Ultimately, the journey to financial freedom always begins with that first single step. And the earlier you start, the more powerful compounding becomes and the easier it gets. So the only question left is, when will you take your first step? If you found this helpful, please don't forget to like, share, and subscribe.